With me today, I have Fernando Fernandez, former senior economist at the International Monetary Fund, ex-chief economist and head of research at Banco Santander, and currently economics professor at IE Business School. And we're going to talk about the possible corporate and economic repercussions of the coronavirus epidemic. Many investors are hoping for a V-shaped recovery once a bottom is reached. But there are so many unknowns around COVID-19. Will they get their wish, or do you think a sustainable recovery when it comes will be a long and protracted one?
The hope that we all had, let's say even a month ago, that this was going to be a very, very drastic and very, very short recession, a typical V curve, I think is behind us already. I don't think anybody expects such a drastic nor fast recovery. In fact, one of the most negative points I should underline here from the IMF World Economic Outlook this week is that they're projecting not only a longer recovery but a lower recovery. You know, they're saying we will be in 2021, be roughly speaking 5%. World GDP will be 3 to 5% smaller. That is a huge drop. I think they've been a little bit pro-cyclical here. You know, since you know we're in this doomsday scenario, it's very hard to get out of it. They have been criticized historically for being very optimistic. Then they may have gone a little bit on the other side. So I don't think we will see a big recovery, but I don't think we can count on a very long, protracted recovery either. I think we will see. I'm confident, and I may be very courageous here, I'm confident that the economy will be back to basically normal by the end of this year. That does not mean, as I said, that we will have to reassess relative price of different sectors. I would think the analysis will have to start doing a lot of cherry picking in terms of sectors, not only companies, because things will change, and especially in the short term. And some companies that were doing very well before this shock, this pandemic, may take a lot longer than others to do good. But companies that had liquidity in sectors where demand is rapidly reestablished, I'm thinking, for instance, typical industrial sectors, infrastructure sector, industry sectors. You know, typically these economies will be able to come back soon. You don't need to really get out of your house too much to buy a house or to buy a car or to buy a new video camera or a new computer. Actually, well, computer is a typical example of a company whose sales have gone up drastically since we all teleworking. But you know, the manufacturing industry in general will recover better and sooner than the service sector, obviously. But again, are we assuming that the world is going to be 20% smaller? I don't think so. So I think we're becoming too pessimistic.
Is there a sector that you think will be the canary in the coal mine? I mean, that's the one that will signal a return of long-lasting optimism among consumers and professional investors.
Well, I think if we talk about the canary coal mine as the one, as the harbinger of change, you know, the early indicator, as economists like to say. Obviously, I think the early indicator will be outside the tourism and air travel industry. We'll need to look at the manufacturing. In fact, my early indicator will be the automobile industry, because this means that people are going back to work, that people think that the future is reasonable, normal, and therefore that I can afford to buy a new car. So in my personal view, the early indicator of back to normal is the automobile industry. Now, the latest indicator, the indicator that will tell me that we're really back to normal, is anything that is related to the flow of people. So anything that has to do with the flow of merchandise, with the flow of goods, is going to behave better in the short term than anything related, stocks related to the movement of people. So the airline industry, the tourism industry, the hotel industry, the catering, the restaurants, etc., that is going to suffer a lot longer. Now, if we see, and that's important, if we see prices in the airline industry and the tourism sector to go back up to normal quickly, then it really means that we have overestimated the shock. Because it is obvious to everyone now today that, you know, for these sectors, for these stocks to recover, we need to see people losing fear of traveling. Now, if we see that, it means that the crisis is behind us. and this may be because we see earlier than anticipated developments in the health industry, in the pharmaceutical company, in the development of medicines to deal with it, or because people simply lose fear. So that would not be this sector will not be my carrying the goal, but it will certainly be the indicator that the economy is much more back to normal than we anticipated.
Fernando, in your opinion, which sectors of the economy will be quickest to recover once the coronavirus pandemic is brought under control?
Yes, I think that the sectors that have to do with the manufacturing goods will recover better than the sectors that have to do with the globalization of people. Let's put it this way. We will see industries shipping out goods much better than will we see people demanding personal services again. So anything that has to do with human contact will suffer, will take longer to recover for obvious reasons, because again, this is not a typical crisis of leveraging companies or problems in the financial sector. This is a crisis of people not being confident to leave their house and seeing other people. So these sectors that have to do with personal sector will take longer to recover. Now, if they recover, then the crisis is behind.
How do you think business and industry might change as a result of this global health crisis? Could there be serious repercussions if, for example, home working becomes more popular now? And can the holiday cruises industry, bricks and mortar retail chains, ever recover from this?
Well, I don't think they will recover. You know, there's a lot of how shall I say this? There is a large temptation in the economic profession to become political scientists and to tell the world how it will change. You know, I'm a little more humble on this. I think we economists know a little bit about what we know, and we don't know a lot about global political social trends. You know, and although we like to estimate them, and we take them. But my guess is, so what I do typically in these situations, in these questions, I look at past crises, and the world hasn't changed after the great financial crisis of the 8-10 years ago. But the world didn't basically change after World War II either. So I think, you know, the human nature doesn't change. So I do think that people will go back to get out, to go out for lunch, to see their friends over a beer, to visit new places of interest, to retire somewhere else. You know, we will get back to normal. Now, what we will see though is some of the trends that we already saw with the digital revolution, you know, trends that we were already there before the crisis, that we have sort of forgotten in terms of the digitalization of the economy, the economy becoming dematerialized, demanding more services and less goods, that we will see increase. So yes, I'll see more people working at home, more people probably doing more flexible work, more people working at home sometimes, taking some days off, taking longer weekends, but I do not see companies getting rid of the headquarters. I do not see large empty offices or commercial space in downtowns. I see the brick and mortar will survive. You know, I remember it was, you know, I was starting to work in the financial industry like 30 years ago when people talk about, you know, clicks versus bricks, and this idea that all branches of banks will disappear. You know, we still have a whole of a lot of banking branches, and people like to go to the bank for certain reasons. So people will like to go to the stores. You know, maybe we do different things in the store than we used to do. Two other trends that people talk a lot about. You know, this idea that we will go to a more local, less global economy. I don't buy this. You know, at the end, price pressure, you know, local production, local consumption is very expensive. Are we willing to pay a price for being local? You know, besides this discussion now in the heat of the crisis. So I don't think that protectionism will survive. In fact, this is one of the biggest fears that I have. If we see more protectionist policies around the world, if we see more governments saying that we need to build auto-sufficiency in terms of different industries, now the health sector, the pharmaceutical industry, tomorrow, whatever, that we see more emphasis on policies towards strategic sectors that need to be protected from global competition, then we will see a larger crisis and a lower world output. But I think that at the end, common sense will prevail, and we will not see a deglobalization of the economy, just as we will not see a more interventionist, more public sector control economy. And there are trends. I mean, we will see some populist politicians and economists calling for a more deglobal economy, a more intervened, a nationalized industry and economy. But I think this has proven wrong, and it will prove wrong again. So no, I'm not worried or significantly concerned that we will go to a different economy where the private sector and the market economy percentage of share of the economy will be significantly reduced. No, I don't see that at all.
Fernando, thanks very much.